Welcome everybody. Happy halving. Great to have everyone on. Discuss the fundamental bullishness of Bitcoin. We got some of the leaders and leading Bitcoin analysts and personalities on board. We got Robert Breedlove here, founder and CEO of Parallax Digital. Preston Pysh. Am I saying your last name right?
Oh yeah, you got it, Sam.
Beautiful. Thank you. Co-founder of the Investors Podcast. Plan B, creator of the Bitcoin stock to flow model that has been going viral for several months now, many months now.
Thanks for having me, man.
Glad to have you on. Really enjoy your insights. And Matt, we also got Matt DeSouza, co-founder Blockware Solutions, co-founder Blockchain Opportunity Fund, co-founder Blockware Mining. How's it going, everybody?
Happy having. Cheers, guys.
Cheers.
Happy having.
Happy having.
Not that it needs any introduction based on the panel title, but I thought we'd start by everyone kind of going into what their outlook is for Bitcoin and specifically why you're so bullish. Matt, if you'd like to start, let's get the ball rolling.
Yeah, sure. I'm bullish Bitcoin. Of course, going into halving, the supply side economics improve significantly, so that's a positive catalyst for it. And then just kind of what's developed over the past 3 or 4 months with central bankers, the Federal Reserve, how there's discretionary, undisciplined spending or manipulation, really, the ability to create your own artificial monetary policies. I think these radically impact the demand side. So we're getting it on both sides, demand and supply side improvements for Bitcoin. And that, I think that really is brewing kind of the perfect storm for the next cycle in Bitcoin. So I'll keep it high level for now. We can go into more detail.
Preston, how about yourself? What are you most excited about?
I'm just excited I stumbled across all this. Yeah, I mean, for me, a big realization happened for me on the model. Obviously, when Plan B published his article, that was huge. And it helped me from a mathematical standpoint really kind of have an appreciation for what kind of seemed a little bit like intuition as to what was going on. But whenever I saw the math kind of behind it, it helped me out significantly. And then I'd say the other thing that was a big breakthrough for me on understanding just the mechanics of how the protocol executes fiat was when I kind of stumbled across this idea that the Moore's law piece is kind of built into the incentive structure. I'm a firm believer in that. And so what I mean by that is if you're a person who purchased a mining rig in the past year versus somebody who purchased a mining rig 4 years ago, your ability to capture margin in your business as a miner is significantly different. And I know Matt can get into this in a whole lot more detail than I can. But in general, a person who recently purchased hardware is capturing a significant portion of margin when they're doing it, when they're mining today. And so when you go through these halving events, in the past, the last halving event that happened, and then definitely the one before that, everyone was stepping into the halving saying, oh my God, it's going to be this minor death spiral kind of event. And I think today, it's, for me personally, I'm just looking at it kind of smiling with a smirk on my face because it is not going to be that. In my humble opinion, it's not going to be that at all, because you have these miners that are so deep in the money with their new equipment. They're the ones that are really salivating at this type of event. Meanwhile, the ones that aren't running efficient hardware and that might not have the best electrical costs, they're the one crying at the party when everyone else is celebrating. So I think they're the ones that keep the whole system moving forward. They're the ones that drive that incentive structure as we go through this next, I call it orbit. And I think that's a really exciting time to be participating in the market, especially for people that are just stepping into it for the first time. Your timing is impeccable, in my very humble opinion.
No,
Great point.
Great point. How about you, Robert?
Yeah, so I think the timing is very, fortuitous for this halving, because, Bitcoin was born in the ashes of the last financial crisis. And these conditions are exactly what it was purposely designed for. And so the fact that we have this quantitative hardening going into this, huge round of quantitative easing globally, I think it's just really going to prove the value prop over the next, 24 months. And, here in the US alone, we're forecasting a $3.6 trillion deficit for 2020. I mean, we're literally scalping that off the taxpayers, just printing that money. And those are massive numbers. So I think the timing of all this lines up could barely line up more perfectly, in that we're going to see the inflationary pressures from this money printing in about 18 to 24 months. And historically, Bitcoin's all-time high price tends to come in about 510 days post-halving. So those two things line up nearly perfectly. So the term super cycle has been thrown around a lot, but I don't think it's hyperbolic. I do think we're going to see a big one. And then two, the fact that the stock to flow ratio of Bitcoin is now equal to gold or on the same footing, I think that is a really big deal. And if we see Bitcoin, assuming this bull run does manifest itself over the next 24 months in the backdrop of an economic recession, I think, the world's going to really wake up to Bitcoin in a big way, which puts the 2024 halving on even stronger footing. And so just to give it like a little idea, a couple of the numbers I looked at this morning, since the last halving, the price has gone from high 600s to 9,000, so it's up 1,200%. The realized cap of Bitcoin, which it's an adjusted market cap figure that's a little more accurate, has gone from 5.5 billion to 104 billion, so it's up 1,800%. Hash rate is up from 1.5 million terahash per second to 122.2. That's up 8,000%. It's a massive number. And then the wallet count's up from 7.7 to 48 million, which is a little over 500%. So, I mean, it's difficult to find a reason not to be bullish in everything that's happening.
No, I totally agree. Plan B, we heard a couple of the panelists already mention the stock to flow and how it's starting to about to be on similar footing to gold. Would you like to elaborate a little bit on that?
Yeah, absolutely. The halving is just a big celebration for me. It's to be honest, I've been waiting 1.5 years since the article came out in March last year for this event. So yeah, big celebration. We're entering a new phase. And of course, the price doesn't go up immediately. There will be some volatility around the halving of people that sell the news and bought the rumor. There will be some pumping and dumping, but no real action. It's mainly a big celebration that we made it this far, and I'm really honored to celebrate it with you guys. Preston, you as a value investor, one of the first few that recognized the value of Bitcoin, and Matt, you with your excellent piece on mining and how that could affect, yeah, brilliant article, and Robert with your zero article that opened a new world for me too, the absolute scarcity. So you guys have to promise me that as soon as this virus thing is over, we do this chat again face to face with some beers and old fashions.
Absolutely.
I'm definitely in.
And
we'll rendezvous somewhere around the world. I know you're different time zones, so we'll get together somewhere. Be a great time.
Great. Yeah, I think for me, the biggest thing is the digital scarcity, right? It's all about the scarcity, the 21 million cap that Satoshi implemented, and that's going to that's going to be played out today at will be around 9 my time. But miners are really pushing all the equipment, and the hash rate is at enormous heights. So maybe it will be earlier. But the fact that it goes automatically to 6.25 bitcoins per block, that keeps the cap there, that keeps the digital scarcity there, and that is the source of all the value as I see it, or one of the major sources, at least in my view.
Hey, Sam, you don't mind if I ask Matt a question, do you?
No, of course not. Please, feel
Hey.
free to jump in, get,
So Matt, my question for you is just, post halving, how much hashing do you think is going to come offline, percentage wise?
So, I think it's really difficulty and hash has net effects. With our companies, Blockware Solutions and Blockware Mining, we're buying a lot of rigs. We're getting rigs in the hands of U.S. miners, so we see the deal flow. And a lot of S19 Pros have sold out. So miners are in this phase of they're in the hardware upgrade cycle, and a lot of the old gen, the S9s, are coming offline. The mid gen will blow out as well if Bitcoin's not above 10,000, above 9,000. But you're getting new gen coming in, and it kind of counterbalances the hash rate. So I think right after having a lot of mining rigs, probably what's left of the old gen, there might be 25 to 30% left of old gen, and I think that's going to be under significant pressure. And I know a lot of the S19 Pros, they're just not going to arrive to get plugged in until late May, early June. So we're gonna capture a good 20 days, 25 days of probably favorable difficulty adjustments. And I think the hash rate could potentially go down at least 15%, 15, 20% in that 20-day window as old gen come off, and we're waiting for new gen to ship in. Because it's about not just buying rigs, but plugging them in and contributing to the network. So
have you seen any COVID-19 impacts on the supply chain for the new rigs?
Yeah, absolutely. I mean, not only new rigs, but you look at some of the next gen, there's been defection rates of 10 to 15%, and miners need to send those back to China. And since everything has been locked down, we in the US, we can't send it to the California site because California's been shut down. So I mean, our operation has had rigs since January. That's an RMA. That's when a rig is dysfunctional and you're sending it back. It's been about 4 months and we still haven't gotten them. So yeah, those are the implications of COVID. Overall, China seems to be back manufacturing and hitting their close to 100% capacities. So there isn't really any more supply bottlenecks. And logistics has been an issue because it's significantly more expensive, right? Global logistics is probably down about 70%, especially air cargo. On top of that, of what's left, that 30%, they're focusing on medical supplies and masks. So it's difficult and two or three times more expensive to ship from China to the US. So that kind of has miners pausing on, do I want to deploy now or do I want to deploy like in July or August?
Very well said. And just kind of segue into the whole COVID dynamic, adding to this perfect storm of bullishness for Bitcoin. As Matt, I think, mentioned a little bit earlier, obviously we got the supply side economics improving with the halving. COVID bringing about not only QE infinity with all these central banks, but also accelerating the rate of digitization, payments, and everything else that we're already in a digital world. So could continue to see this adoption accelerate more, not just out of this speculative increase, but obviously in the news lately, Paul Tudor Jones came out. He's buying it as an inflationary hedge. What other drivers other than the broad stroke, anti-QE movement would you see?
Who's the question asked to?
Oh, I'm sorry. Open question.
I've got kind of maybe a contrarian point of view. I don't know with this crowd whether it'd be contrarian or not, but I'm of the opinion that your mining selling pressure sets the floor of what we're seeing. So as this difficulty, or as the 4-year halving takes place, it's bumping that price premium that the stock to flow valuation puts at in the 90,000 range. I'm sure Plan B knows the exact figure, but it's around that price point. So as we transition to that, the miners are stepping in, and the ones that are mining at a large profit because they got new hardware are the ones that are driving that price higher and higher and higher, right? And so as we go through that transition, a lot of people can say, oh, it's because of all the printing and everything else. And I think that has a huge impact on the price. But I think at the end of the day, the price floor is being set by those miners that are running the newer hardware that demand a higher price premium for them to sell their treasury of coins that they're sitting on their balance sheet. So, as I look at the halving event, this is huge. This is a massive event that is going to drive the price just through simple supply and demand. The other side of this that I think is important, not only with the miner selling, is the fact that you have people that are sitting on Bitcoins that they acquired years ago. They're so deep in the money in the position that they continue to hold them. I mean, they're in no rush to sell that position. They don't need to sell that position. It's like a billionaire in fiat today. Like, they don't have to go out there and sell that position for anything because they have so much of the position. And you have the same dynamic playing out in BTC with some of the people that have been in the space for 5 to 10 years. That's where they're at. And so that supply is off the market. And so you're reliant on the miners that are mining these coins to put more onto the market in order to pay their electrical expenses.
Couple great points there. Conceptually, I think Preston explained it really well. What drives it from a miner and metrics perspective is, as more miners come online, difficulty increases, and therefore everyone's break even is going up. So that's what's pushing up the price of Bitcoin. When the network hash increases, everyone's break even goes up. So because everyone's getting allocated less Bitcoin, and therefore break even price increases. So that's really what's happening behind the scenes to push cost of production up for everyone, and that continues over the long term. And Preston explained it well. So it's really difficulty and increased network hash is what drives that. And then you made another great point at the end. What were you just stating?
Just about the people that are deep in the money that are holding their coins. Yeah. They're not selling them and putting them on the market for people to buy.
There's that, and also they become so important because it's, when you think about our society from a game theory and human psychology perspective, think about like the Koch brothers or the oil and gas industry. They have a honeypot to protect, right? So they donate millions and millions to politicians or lobbyists to protect their honeypot. And that's what we have going on in the Bitcoin space. I know of significant individuals who have accumulated mass amounts of Bitcoin in 2012, 2013, and they're looking to essentially protect the network and bring hash to the US and invest in mining because they want to decentralize the network and protect their massive stake, right? So yes, the supply's off. The supply comes offline, their quantity of Bitcoin. But on top of that, now you're developing some significant players who will expend money to improve the network, to protect that honeypot that they have, that massive stake. So I think that's really interesting too.
Yeah, I also think it's funny that we don't actually are very sure about why the price will go up. Of course, it will be demand and supply, but even with the stock to flow model in the hand, we don't know exactly why it is. It could be the less selling pressure by miners, right? That's one thing. But the counter argument would be that the number of coins that are mined per day, it's 1,800 today, and will be 900 in a couple of hours. It's really a low amount compared to the daily flow of Bitcoin. So maybe less than 1%. So the less selling pressure from miners could be one thing, but the other thing, and I think the Paul Tudor Jones thing illustrates that well, is that there's a mining perspective, but there's also an investor perspective, that more and more investors are going to look at Bitcoin as a real asset, a thing that's as scarce as gold. You see the headlines already. So that could be the narrative of the next phase. And so there will be a lot of more money flowing into this market. And that could also be the cause of why the prices go up. And if there's one thing I hope we learn this next few months after the halving, is that we get some better insight into why the prices are up and the dynamics behind it.
Yeah, I think, at a very high level, something I see playing out, and it's not talked about often, is that, Bitcoin is the first incarnation, or the closest thing we have to perfect economic information. Like, we know its supply perfectly forever. And, you can't say that for any physical commodity on Earth. And again, another product of that is its absolute scarcity that we've all talked about. And, as Mark Twain said, I think I'm paraphrasing here, is like, to make something valuable, you just have to make it scarce. And Bitcoin sort of perfects that once and for all for money. And another thing I see that will drive, so to that end, in perfect information, as the correlation continues to hold to, say, the stock to flow model, you're creating more of an incentive for people to front run this thing. Satoshi said when he launched Bitcoin that it may make sense to get some just in case it catches on and becomes a self-fulfilling prophecy. Like, that's what the perfect information of Bitcoin is effectively doing, in my opinion. And the other interesting thing about the mining side is, as the financial services aspect of Bitcoin becomes more mature and miners can gain access to liquidity by means other than selling their Bitcoin, say doing Bitcoin collateralized loans, that's going to reduce selling pressure as well. So that floor is going to get pushed up even harder. And, with the Paul Tudor Jones thing, I think is, a huge seal of legitimacy from mainstream macro. And as, we all know, speculators tend to become holders over time. Where they put their money, their mind follows. They'll fall down the rabbit hole and see some of these deeper aspects of the value prop in Bitcoin. And, I think still it's sort of getting adopted at the fringes. It's the billionaires seeking to kind of insure themselves against a nascent financial system, which Bitcoin sort of represents. And then we have the victims of inflation on the other end that are just seeking to protect their wealth and live another day. So, it's a really big deal from a lot of angles.
Yeah, and from a market's perspective, it's absolute. The demand side is what really, the sell pressure report. We put that together in December of 2019, back when the price of Bitcoin was at 10,000, and we expected kind of the sell off because there wasn't much stimulating the demand side, and the sell pressure and stock to flow. To me, those are guardrails. They indicate what the environment is like. So when sell pressure comes off, it provides an environment where it's easier for Bitcoin to rally, but the demand side has to come in. And the demand side is really driven by the fundamentals, right? What's going to bring retail in? What's going to bring hodlers to bring more fiat in? What's going to make investment funds bring more money in? So I think stock to flow is an excellent analysis, but it's a guardrail. What you really need is the demand side to fuel Bitcoin higher in price. And Plan B had mentioned, well, the amount of coins that are getting released, percentage-wise, it's small. Percentage-wise, it's small compared to daily volume. Well, a majority of that volume is it's day traders. It's people taking both sides of the trade. It's it's really churn. That's short-term volatility. But what really is going to move price over the intermediate and long term is net cash in and out, and the miners, that sell pressure is significant from that perspective. But what creates a bull cycle is the demand side. A lot of new fiat coming in, and that's what has made me so bullish over the past 3 months, because what the Fed is doing, what's happening with the economy, QE, what QE does, I hear people say it exacerbates income inequality. It doesn't really exacerbate income inequality. It's really net worth inequality that gets exacerbated. The lower middle class and the lower class, they don't own assets, right? They rent their house. They don't have discretionary income to buy stock. They don't have, they just don't, they don't have property and other assets. QE just pushes up the price of all assets, right? So the net worth, the high net worth, the upper middle class, individuals with jobs where they're putting some of their money into a 401k and the company's contributing, they're the ones who really benefit from QE, because QE pushes up the price of equity markets, real estate. And so you get this exacerbation in net worth inequality. And people are going to point to that and say this is caused by the Fed. And we don't want a system where there's an individual who can discretionarily and recklessly print money, and it's creating more net worth inequality in the US. And then people start to look elsewhere. And I think what we're going to have in 2020 is that looking elsewhere is going to be Bitcoin. And that's what's going to fuel the demand side. And that's really what kicks off that next bull cycle and fuels it.
So Matt, I have to piggyback on this because I flippin' love that point. So here's where I think it's going to really get fascinating. So you look at these high net worth individuals and how they were able to buy these massive bond tranches. Since 1981, you could have literally just sat on your hands and done nothing and absolutely murdered the bond market. As far as the price just constantly getting bid, interest rates going down, the prices go up, right? That dynamic has played out since 1981 for any high net worth individual. You look at how, Warren Buffett's a perfect example. He always had a massive bond position until this recent cycle. He was investing the float of Geico, right? Made tons and tons of money. Now you've got interest rates pegged at 0%, not just in the US, all over the globe, right? And where it's really getting fascinating is you're looking at the curve of where those interest rates are going, and everyone's saying by November, December, you're going to have interest rates in the US negative. So now if you're a high net worth individual and you're being offered negative interest rates on the thing, your sweetheart investment that's paid you billions and billions of dollars for decades, and now all of a sudden that trade is going nowhere. And when you look at the timing of what the stock to flow model is demonstrating, that we should be around 20,000, we should be passing the previous all-time high around Christmas, call it January or somewhere around in that time frame, right? When this same dynamic where bonds in the entire globe, you can't find yield anywhere. And now all of a sudden you have this thing that goes beyond its previous all-time high, and they're looking at it from the lens of any long-time holder who has bought Bitcoin in the last 10 years, not a single one has lost a penny, right? Has not lost, I should say, a Satoshi. They have not lost any money, right? Every single person that bought and held since inception has made money at that point in time. So that's going to be such a crazy narrative. I just can't even imagine what that's going to look like in the media and how the media is going to run with that story. I mean, you can already see CNBC. I know when I entered this back in 2015, like, dude, this was never talked about on CNBC. And if it was kind of like a joke type discussion where people were rolling their eyes and saying these people are crazy. Now it's brought up every single day. Every single day on CNBC, it's brought up. So I'm seeing the model. I'm seeing where that projection's at. I'm seeing where the bond market's going to be, which is $100 trillion market cap, right? Globally. So like, this is going to be crazy at that point in time. I think at the start of 2021, things are just it's going to be unimaginable by all these different correlated like they're all intertwined together. It's just going to be nuts.
100
Yeah.
trillion US dollars. I couldn't agree more, Preston. Nice number. No, I think you're absolutely right. The negative interest rate in the US will be a total game changer. I saw it here in Europe. As soon as the bank accounts charge negative interest rates, everybody's looking for something else. And that something else will be Bitcoin for a lot of people.
And the reason why the US dollar isn't there already, I mean, when you think about risk and yield, in Europe, in Japan, there's negative interest rates. So it's lower yield, but higher risk, right? Like you should be getting higher yield for more risk. So everyone is looking at the US and going, I can get higher yield yet lower risk, because people view the dollar as lower risk than the European currency, as well as the Japanese. So I believe that's what's going to be a little bit of a drag from us going to negative interest rates, and why we're not already there, because people from Europe and around the world would rather put their money in dollars, get a lower risk exposure, yet get better yield. Right. So that's what's keeping our yield up right now. That's what's going to hold back inflation. That's what's allowing the QE, this QE cycle, because the money still flows into dollars. But yeah, that's a little bit of a tangent.
Well, we haven't even seen the bailouts of municipalities. I mean, none of that has even played out yet, which I think is,
I live in Chicago, by the way.
Yeah, I mean, like it's not like if it's going to happen, it's when it's going to happen. And so like none of that has even played out yet. So I can only imagine in the backdrop of bailouts, and you have people that don't know anything about the economy, literally nothing about the economy, but they do know, their intuition is telling them that this can't be sustainable, because you just can't give this company $1 billion and that company $1 billion. Oh, this municipality failed. Oh, this state's pension plan is in trouble. Like, people know that somehow they know it's just not sustainable and that it can't persist. So then they're starting to say, well, what else is out there? And they're searching and they're looking for, how does this end? And I think all that is not even hit the tip of the iceberg yet.
It's not priced in. And you look at the charts, the equity market has gone to Mars. Unemployment has gone down, right? So there's that spread. That spread needs to come in. You can't have all this unemployment and an economy that's not functioning while the equity markets are going up, and that's really driven by QE, right? It's the spending. But the other thing is, when you carve down, peel back the layers of the equity markets, you look at the Russell 2000. It has lagged significantly. That's your indicator of small business and small companies, all the small caps. So it's lagged significantly. The NASDAQ is almost at all-time highs. It's only 3 or 4%. It's up year to date. It's maybe 4 or 5% off all-time highs. And that's driven by the mega market cap stocks, Amazon, Apple, large companies. So once again, we're seeing this dynamic in the economy where the large companies are eating the share of our economy, and the small businesses and small caps are getting blown out. That's what's happening, and that contributes to that narrative of what's going on in our society. And that's where people start pointing to a parallel or a different financial system, which I think is going to be Bitcoin. Looking at because really that's driven by Federal Reserve's printing, and that's why people are going to look at what asset class or what system doesn't allow that. So that's what I'm really interested in.
Yeah, and that is the Cantillon effect by design, right? Scalp wealth from people at the lowest tiers, reallocate it to people at the highest, which in this case, most of that wealth, that confiscated wealth, is being frozen at the financial asset level. And we see that in NASDAQ, S&P, but you see the other side of it in the weak Russell and the other small business aspects. So, and I'll push back on this though, is that QE does both. It does create net income, or it does create wealth disparity, but it also creates income disparity because, capital generates income. And it also, because we erode this trust network through which business interoperates, you actually reduce productivity. And this is like the extreme example of this would be a country in hyperinflation, right? Its productivity drops to zero. But that's not a binary outcome. Like the higher the inflation rate increases, the less productive a country becomes. So less productive, the higher the prices, the lower the take for the Main Street guy. The other thing that's interesting is, with negative rates especially, is U.S. Treasuries are the collateral base of the Eurodollar system, which is this U.S. dollar derivative system used by offshore bankers. If we go into negative rates here in the U.S., that's going to push this hunt for alternatives even further. We've had China and Russia seeking for some time an alternative to the U.S.-centric financial system, and that they're, due to geopolitical game theory, they'll be pushed towards a neutral money, a neutral settlement system, which in the world today, there is nothing better than Bitcoin for that. The other thing that's I think is interesting too, that will be a demand driver, is as we see this populist backlash of countries looking, that where monetary policy is failing, countries will look to enforce more fiscal policy, more heavy-handed. And the billionaires and other high net worth individuals they come after, they're going to seek refuge in confiscation resistant assets, right? These used to be offshore banking, physical gold, et cetera. But as we all know, Bitcoin properly stored is basically immune to confiscation. So I think that's going to be a big demand driver as well. And, in a world where inflation is kind of becoming the primary means of taxation, and Bitcoin's the only money with a 0% terminal inflation rate, you could say it's, in that sense, it's kind of like the most perfectly tax-resistant asset we've ever had. And clearly there's going to be a huge demand for that. And I guess in general, the high level is, it's transforming this Keynesian versus Austrian economics debate from a philosophical debate to a live market test. And we're seeing that live market test play out in real time. And it turns out the Austrians were right.
Some really great points there. And I love hearing that. And I'll just give you some real world examples. When we went to China and we visited some of these large mines, massive mines in Chengdu, and met some really large miners. They are mining Bitcoin. A lot of them are mining Bitcoin to kind of get capital out of China, right? Because you're expending your currency, their RMB, on electricity, and then they're acquiring Bitcoin, and then they can move it to Canada or the US and either buy real estate or hold on to their Bitcoin. So we're seeing, we met a few large miners doing that with the purpose of accumulating Bitcoin to get out of the RMB currency, which I think is fascinating. It's the capital controls. My fund was kind of doing a SAF trade, OTC with a Chinese fund, and we were like, yeah, send us a wire, and the wire's too large. They have capital controls, so a lot of them are holding funds in either Bitcoin or Tether if they don't want to deal with short-term volatility. So we're seeing this dynamic play out in the second largest economy in the world. Capital controls are real, everyone. Like we're in a bubble in the U.S. These things, they're just not as like relevant to us because we're not seeing it. But the rest of the world, that's the norm. And Bitcoin's a global phenomenon. So these are really significant catalysts that will push the adoption.
Yeah, it's an exit hatch from this panopticon that's been constructed around us, and it's more visible in countries like China, but it's increasingly visible worldwide, right? And the more money we print, the more painful it becomes for everyone.
Absolutely.
So, the desire for that exit will increase.
Another major power that will accelerate all that we have been talking about is arbitrage, I think. And this guy Paul Tudor Jones is a great example. I don't know if you know him, but he has a he has a very nice. He goes back a long time, so there's a very nice old documentary on YouTube that I recommend everybody to watch. It's from 1987, and there was a time this video was forbidden. It was not for sale. It was hard to get. But now it's on YouTube, and make sure you see it. You see the younger version of him in 1987, and he's doing arbitrage and FX mainly between all the currencies, and I think that's Bitcoin is also a currency. It doesn't have an interest rate, but there is a very strong arbitrage relationship between currencies all over the world and interest rates. Of course, it's very tight, mathematically. So that will play into this whole macro environment thing, and maybe the arbitrage forces are even stronger than the adoption forces of retail and et cetera, et cetera. For me as an investor, I see big people like Paul moving into the space. When they see something, they see something. They're not going to move 1 or 2% of their assets in Bitcoin if they don't see, well, I guess what we're seeing as well, and but more people will do so. And I think that will be, those people have money, and 80% of the people on Earth don't have money, so they can adopt, but it will be a very small impact. And I think arbitrage of big funds, billionaires, etc., that will really make a big impact.
Totally.
It's a great. Go ahead.
Go ahead, Matt.
I was going to say, just piggybacking off Plan B, he makes a great point. Global macro investors, global macro hedge fund managers, they don't dip their toe in. The number one rule is cutting your losses, but number two, it's almost a greater sin to hit a home run or to hit a massive trade and not have enough allocated. So, Stanley Druckenmiller said it best. When he used to manage money for George Soros, you're going to be wrong on a lot of your trades, right? But George Soros said it's never okay to be extremely right and not have enough capital in play. So these large fund managers, especially the macro ones, they understand that. They're not going to just dip their toe in. They're going to get a significant position in Bitcoin. And I'm just kind of mimicking on what Plan B says. It's not okay to hit massive numbers and not have it be significant to your portfolio because you took a tiny little position. So expect some fund managers to take significant positions. And also Paul Tudor Jones is just the first domino. A lot of fund managers are your traditional kind of the middle tier. They're followers. That's why the market operates as a herd. So this is just the first domino, and I expect many more waves of fund managers to start looking at Bitcoin and getting involved.
Just to give you a number, to put some number on there, $10 million is often seen as a seed capital kind of thing. That's a absolute minimum. So
exactly.
And I think this segues well into a point Preston made a little bit earlier about the maturity of the derivatives market for Bitcoin, not only as it comes to miners, but to create more of those arbitrage opportunities for the larger macro players to be able to move, that type of size without, having to go through some of these retail exchanges, the current channels like they do now. What do you see as the biggest threat for this growing dynamic? So we've seen it slowly evolve from a fringe technology, using to buy things on the dark web, to now sort of a commodity in its infancy, to where we can see it potentially being the framework of a parallel financial system. What do you guys think is the biggest threat to that roadmap potentially being achieved?
I don't know if I'm answering your question, but I want to talk about a threat that I noticed the other day. And this is the bullish panel. So this is Bitcoin bullish, even though I'm talking about a threat. So I was talking to a person who had issued a loan to another party in excess of $1 million. And I looked at them. I was like, that's really scary for me. If you are the person who is issuing debt in this environment, I'd be very concerned, because if in fact we are moving to a new global currency, and let's just play devil's advocate and let's just say, hey, this thing's going all the way on the next cycle. The risk for people is going to be the speed at which they can move their positioning, the liquidity of how fast they can move their positioning. And when I look at all the dynamics at play from a macro standpoint, and I look at historical events and how people are trying to transition into the new currency or something that's going to preserve their wealth, one day of waiting will literally feel like 4 months when you're going through those types of events. And since we've never experienced those types of events in our lifetime, it's really hard for people to envision what that is and what that is going to be like. But I think one of the biggest risks for anybody, especially people that have issued debt denominated in fiat, I think they've got a huge, massive risk on their hands, because to offload that, they're going to have to offload it at a severe discount to the principal that it is listed for, in order to expedite the movement of that. And then you have to go through traditional clearance and all this other stuff. Like, I mean, it takes a long time to get your money onto an exchange and to participate in this new emerging thing. And so, I mean, I just don't know how the market is going to possibly be able to handle a news cycle that says Bitcoin goes through 100,000. Like, what that's going to do when you have Paul Tudor Jones buying it right now and other people like Paul Tudor Jones buying it, that I just can't imagine the amount of people that are going to try to fit through that pinhole of liquidity into something that is this scarce and that many coins that aren't even on the exchange anymore, because you got a bunch of people sitting on them that aren't selling them. That to me is just a crazy risk that I think very, very, very few people understand at this point.
It's one of what you're bringing up is one of the significant factors of why Bitcoin has these massive run-ups in a short period of time. It's literally a pebble, right? That's how large Bitcoin is compared to other asset classes. I don't know, the market cap might be 140 billion right now. That's that's a third of just Facebook stock. Forget the equity markets. We're discussing one stock, right? It's a tenth the size of gold. So if you get just a little, right, I think there's 36 trillion in pension money. If you just got 1% of pension money involved, that's 360 billion. Now you don't, right? That's twice the size of Bitcoin's market cap. That's not how market works, though. If you inject $1 billion into Bitcoin, it's going up many multiples. If I went onto the exchanges right now and I hit a market order of 3 to 5 million, I'm going to move the price a couple percent, right? So Bitcoin and why we're so bullish and why we think this cycle could move so quickly, and why I talk about sell pressure and stock to flow more as guardrails. I don't really view them as much as price targets, but more guardrails on when you're in environments for Bitcoin to succeed, for the price to increase more easily. That's why I kind of view them better as guardrails. And with Bitcoin, the market cap being so small, and now when you have a technology, a disruptive technology in its infancy, yet you have this robust secondary market with liquidity, right? We have the secondary markets, and now you infuse speculators. And now you have an environment where they're able to start envisioning the possibilities of this technology coming to fruition because of, the QE and the Fed spending. That's how you get these parabolic bull markets. It's such a small market. You infuse capital in there, and you have a secondary market. That's how you get the parabolic bull markets. It's why we're so excited over the next 18 to 24 months.
Plan B, I'm kind of curious to hear your thoughts, because I think Sam was going after something much more negatively oriented towards Bitcoin.
Yeah.
I can't give them an answer other than the liquidity concern I have for the other side of their the rest of their portfolio.
I'll talk a bit about the futures, because I know a lot of, from the polls I did as well, that a lot of people see the futures market as one of the major bad things for Bitcoin, and one of the things that broke the 2017 all-time high. I don't think that's true. I think that futures are a very positive influence for Bitcoin market, because it gives an exit for big investors. So, for example, me as a big investor, not as a Bitcoin investor, but as a pension fund investor or institutional investor, I would never invest in something that I cannot get out of easily. And that means that there must be derivatives markets. There must be put options to sell, to buy. There must be futures to sell. There must be different exits, and that's a condition before I would enter the market. So futures is a very good thing from that point of view, and it's also a very natural place where miners that know how much Bitcoin they are going to mine next month and 2 months from now and 3 months from now, and who don't want to have that volatility. Those miners can sell in the future. This Bitcoin, they can hedge their and get rid of the volatility. And against those miners that are sellers, natural sellers of futures, there are the funds and the Paul Tudor Joneses that want to enter the Bitcoin market, don't want to own keys yet because they don't know it. Or there's funds that never want to know, have keys and are always going to be the paper Bitcoin investors. So they'll take the long side of that trade, and that's a very natural place for big money miners on the one hand, is funds on the other hand to establish on the futures market. And of course there will be speculators that go naked short and blah blah blah, but those are small players, I think, in the end. So I think it's a very bullish thing that we have a fully functioning and regulated futures market at both the CME and BACT in New York. So yeah.
To use a Talebian analogy on that, it's kind of like we have a very crowded theater with a small and shrinking exit. The exit being Bitcoin, and the theater being just everyone's stuck in either the world of capital controls or an inflationary environment, and that the demand for the exit is basically the Bitcoin price. So I agree with everything that was said, which is the bullish side of the threat model, I guess. But just to speak to the negative side, I've long believed that the best attack vector on Bitcoin geopolitically was a global disinformation campaign coupled with a coordinated reversion to a gold standard. And I think that's probably the best hope governments would have to try and put the genie back in the bottle, so to speak. But I've been thinking more about, and the IMF published something recently where they're basically saying they're going to start looking at how to do derivatives of SDRs and push those out to consumers and institutions basically to digitize SDRs to make them commonly useful. So this would be SDRs are special drawing rights. This would be basically world money, right? So this would be the one world currency or something to that effect, which I think is a legitimate threat because they could really try to enforce the grip they already have in the existing financial system. So there's a threat there. I still feel like demand squeezes out as they try to constrict people in that model. I think people still spill out, as Matt was saying about people in China using Bitcoin to circumvent capital controls. I think you still see that, but that is a threat. And then the last thing is just the law, right? I mean, we've seen, Executive Order 6102 in the U.S. where they confiscated gold in the past. There's a very real chance that nation states can wake up to the existential threat that this poses and just flex on the law, just saying you have to self-report, you have to turn it in, it's illegal to own. They can couple that with a disinformation campaign, start smearing Bitcoin as terrorist money, which they already kind of do, drug trafficking, whatever. And that just pushes people into a position to consider how much they value compliance versus freedom.
That's a great note.
And who knows how people, where do they fall on which side of that decision?
Robert, do you think?
I don't mean to interrupt. I'm really digging this conversation, but I just want to get closing thoughts from everyone. We're running a little bit out of time already. So if we want to go down the line and wrap things up, Preston, I believe you had just started and interrupt.
Yeah, no, I'll transition into something else. I was just going to say, I think that argument gets harder by the day. I agree with Robert. I think that risk is very real, but I think the argument gets much harder by the day when you have, the Paul Tudor Jones of the world taking positions that are very influential people. The ramp up of this, the parabolic piece of this makes the speed at which it's going to happen very difficult for that to play out, I think. So
I agree.
Great point.
But I love the fact that Robert actually brought something to the table, unlike myself. I think this is a time of celebration. I think this is really exciting. And I think that moving forward, Plan B's thesis is going to become very valid, and I'm excited to see that play out.
Awesome.
Yeah, I'm as excited as you are. So let's see it go that way. And great to talk to you all, man. And happy Halving.
Happy Halving.
Happy happening, everyone. I'm glad we got everyone together. I think we're, these are Robert, Preston, Plan B, three, some of the greatest analysts talking about Bitcoin in the space. So really lucky.
Yeah, I feel very fortunate to have found what I think is my life's work in Bitcoin. And, to me, it's a reinforcement of that belief to be surrounded by great minds like you guys. So thank you a lot. And, this is the separation of money and state, which is a really big fucking deal for the rest of history. So I'm just glad to be a part of it.
Amen. Well said. All right, guys. Well, I think that just about does it for the fundamental bullishness of Bitcoin. Really enjoyed the talk.
Did the price go up over the past 50 minutes?
I don't know. The rally probably.